Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, today we're going to talk about three topics. One is about FPX Nickel's very important financing. The other is about a press release Scandium International put out that I think should get people more interested in the company. And the third is what is the meaning of an announcement that came out from MIT a couple weeks ago about the way dendrites form within the lithium-ion battery.
John, what do you think about the $12 million FPX Nickel just raised from a secret strategic investor?
This development is a very important one for FPX Nickel. Now, in this press release, they indicate that completion of the pre-feasibility study, which we had kind of expected by the end of this year, will be due in the second half of next year. And they had indicated earlier this year that they would probably need more than the $20 million or so they raised in April 2021 to fully complete the pre-feasibility study. And the market's been kind of anxious about that because we are in a bear market. There is skepticism that this very low-grade awarenite nickel deposit at Dakar in central British Columbia can be developed as a mine, and the stock is significantly undervalued in terms of what's indicated by the preliminary economic assessment that they put out back in late 2020. And I've been very bullish on this company. I think it should be trading in the $2 to $250 range, and that's even justified with if I escalate the costs from the PEA numbers 20%. But because the company needs to raise money and we're in a bear market, that kind of has weighed on the market. Now, the company managed to bypass the Bay Street capital markets entirely. The party that's purchasing 9.95% of the company through 24 million shares at 50 cents, which is a significant premium above the 40-cent level where the stock has been trading, is described as a strategic investor, and it has asked that for at least for its identity to be kept confidentiality. It has the right to maintain its its 9.95% interest in any subsequent financings the company does. But there's also a standstill agreement that it cannot increase its stake for 2 years beyond 9.95%. And everybody's been scratching their head. Well, what is this entity and what makes it strategic? And this week, Bill Powers from Mining Stock Education did an excellent interview with the CEO, Martin Turan, where Martin spelled out a number of ideas which give us a clue that this may not be a traditional mining company like a Rio Tinto or a Vale or a BHP, which has the muscle and the scale to want to develop something as large as Dakar, which would be a 120,000 ton per day operation with a 40-year plus mine life. What Martin did was talk about having dealt with a large number of both mining companies and strategic partnerships that were clearly not of the mining nature. And he talked about four groups, mining and chemical and battery and car companies. And apparently they have been dealing with all four groups with confidentiality agreement. And this financing that came out for $12 million, which boosts working capital to $18.5 million, was a result of kind of an auction or competitive process where they decided which one of these parties they wanted to deal with. Now, one of the clever questions that Bill Powers asked is like, okay, Martin, obviously you can't tell us that this is Tesla or LG or anything like that. But will this entity be able to give you any sort of technical advice as you move this project through the pre-feasibility study and beyond to feasibility and permitting? And Martin gave us a clue that this was not really a mining company because he talked about there is a limited there's a limited area of technical advice that can come. And he also, in the same interview, talked about multiple parties becoming involved in the future development of this project, and there being an interest in the different types of products that can be produced. And there's basically two types of products. There's the ferronickel concentrate, which can be fed directly into stainless steel mills. And this is what the big nickel mining companies are going to be interested in. They're not that interested in making nickel sulfite from this, from the Dakar ore, but all the other companies are very interested in it, and they care about where it comes about. So reading between the lines, I would say that it is probably a chemical or a battery company that has taken an early stage stake in this company at a premium to market, but at a substantial discount of what this project should be trading at if it were rationally valued. And the good thing for FPX Nickel is that this not only takes care of all the costs now required to complete the pre-feasibility study sometime in the second half of next year, but also reasonably well into 2024 as they begin the feasibility study. It allows them to continue with the environmental baseline studies uninterrupted. And the strategy here obviously is that this entity isn't that interested in operating a mine, the strategic investor. They want a seat at the table so that they have some say when this mine ends up being developed. And I can imagine a $50 million financing being done at $2, say, a year from now, and maybe $100 million financing a couple years from now when they're in the middle of the feasibility study. And each one of these other parties grabs 10%. And these could end up being something like the Japanese model, where we've often seen these big Japanese conglomerates buy 10, 15% stakes in actual mines or in a junior company. And when a big mining company buys out the junior, these big equity holders, they don't tender. They become funding partners with the major mining companies, because these other three groups, they know nothing about developing a mine, but they do know what the end product is going to look like, and they will be in a position to ask for offtake agreements that allow them to say, hey, our inputs are coming from this certifiably clean ESG source, and they're also assured that in this case, the nickel sulfate that they will need for that type of lithium-ion battery that still requires nickel come 2030 and beyond, that they will be guaranteed the supply. And the beauty of this situation with FPX Nickel is that while by 2030, the world may no longer need nickel for the lithium-ion battery, the world will still need stainless steel. And so in the worst case, they end up just making money on their investment and sell their position to the major mining company, who then develops a stainless steel market. So this, I think, is a very important development. The market would have liked to have known the identity of this party and get all excited. Oh, Tesla's now investing in FPX Nickel. But it's not necessary. It will soon enough sink into the market that, hey, this company now doesn't need to go to Bay Street for at least a year and a half, but it'll have a robust pre-feasibility study on the table sometime in the second half of next year. And then the mining companies can start taking a serious look, an even more serious look than they have been doing. And the institutional audience, the BlackRocks of the world, they'll be interested in stepping up and putting up, to say, that next level of financing, perhaps in conjunction with additional strategic investors. So this is a very positive development for FPX Nickel, and this sort of cloud that's been hanging over the market as to how they're going to raise the rest of the money to finish their PFS. That is gone. They have now indicated that the pilot plant study that's going to make about 18 kilos of ferronickel will not be completed until early January. However, they have been using the ferronickel concentrate that's been produced during the study. They've already started feeding that into the hydrometallurgical bench scale study, which is key to demonstrating that, yes, this flow sheet that we've developed for making nickel and cobalt sulfate, this does work. And they're still expecting that late in the third quarter, so that timeline has not changed. And that's the one that's going to be of most importance to this third group of companies who are either catering to the electric vehicle sector or are the electric vehicle makers, to show them that, yeah, we will be able to supply that battery-grade nickel sulfide that you need. And also several weeks ago, the company published an updated resource estimate for Baptiste, where there was a 6-7% increase in the nickel grade, which doesn't sound like much, but for a low-grade large system like this, it's very significant. But they also added an iron and a cobalt credit. And the cobalt credit is very, very small in terms of percent cobalt, but these are DTR grades, not geochemically present grades. They are what is recoverable through the Davis tube method, in other words, magnetic separation. And this cobalt will be in the ferronickel concentrate. It's, of course, not payable if it's used for stainless steel, but when they make the nickel sulfate out of the ferronickel concentrate, they will also be able to tease out the cobalt as a sulfate for the battery grade usage. And it's only 1,000 to 1,500 tons of theoretical potential output from this, compared to like 60,000 tons a year plus produced in the world a couple years ago. But for somebody who needs that little bit of cobalt sulfate input, this is significant. And for the iron too, it is the magnetite that they will end up in the first stage of ferronickel concentrate that then gets floated to upgrade from 12% nickel to 65% nickel. The magnetite comes out then, and it ends up in a separate bin, and it is potentially payable also if they can find a market to it. So this updated resource estimate sets the stage for them to add additional revenue streams for their pre-feasibility study when this is delivered next year, and it also stands to increase the net present value of this and offset the very likely CapEx and OpEx costs that the inflation of the past several years has created, offset it, and have this project continue to be as robust as it was when they first announced it, using $7.75 a pound nickel. And I don't think anybody thinks $7.75 per pound nickel is going to be the future long-term price. The project looks wonderful at the current $11.50 a pound price. And I think this stock is one, if you have a minimum 1-year time horizon, willing to buy this and put it away, you're looking at a 5-bagger and then perhaps another 2 or 3 times increase before it reaches the sort of level where a major might step in and make a bid for the entire company and probably only have to pay for maybe 60, 70, 80% of it, because the other parties that are coming in are going to be the strategic investors who want to be part of the future mine development scenario.
John, what did Scandium International announce that caused it to move up a penny?
Yeah, it moved up a penny, and then it sort of sagged again. It was a very encouraging news release. They were Peter Evanson was at a conference, a month ago, and a Scandium conference where they talked about potentially doing some more drilling on Honeybugle. Now, Honeybugle is the project that's 30 kilometers or so southwest of the Ningen project, for which they had achieved the mining lease, which was canceled because there was a mistake made in the whole process for approving it. The surface rights owner of the eastern part of this project, he had complained about this, that this was agricultural land and should not be subject to a mining lease. This ended up being challenged. It was resolved in favor of Scandium International, and they're in the process of reapplying to reinstate the entire mining lease as it was before. It didn't really matter because the western half, where all the infrastructure is located, where they have the surface rights, and where the west pit is located, that's at least 10 years out of the 20-year mine life of just the limonite, not even getting into the underlying saprolite. So they could have developed this at its initial stage of a couple hundred tons per day, producing 35 tons per annum of scandium oxide, and just ignored the farmer on the other side. So one of the things they announced is that they're going to go in there and do a 500-meter program of about 6 holes in the western extremity of this of the property, and it's designed, I think, to increase, see if there's a more high grade in that area and extend the amount of time that they can just work on the limonite resource on the western side and not worry about the surface rights on the eastern side. That doesn't really interest the market at all. What's much more interesting is that they are going back to the Honeybugle project, which back in 2014, the company had drilled a number of holes in it. I've done a back of the napkin calculation and in the Seaford anomaly. There were 4 magnetic anomalies on it. They only drilled the Seaford. And one particular area, based on sort of fairly wide spacing and connecting the dots and, assuming sort of the similarity to Ningen, that there is consistency where there is the mineralization, I come up with a sort of 3.5 to 4 million ton resource back of the napkin with about 272 ppm elemental scandium, and that's very good. Similar, perhaps better than Ningen itself. But there were other targets, and the company's going in the first quarter of next year. They're going to go in there and tackle the Woodlawn target, which is untested. And it's also a magnetic target, and the underlying rock which hosts the scandium is either mafic or ultramafic rock, which is what creates the magnetic anomaly. And the whole area is anomalous in terms of scandium in the soil sampling. So the 27 holes will go into that to see what's there, and another 6 holes will go into the Seaford to stitch that back together again. They did not indicate that it would be sufficient to support a JORC estimate, but by tackling this other project and potentially demonstrating that there is a very substantial resource on the Honeybugle project, they set the stage for making this the ultimate optionality play for when, say, Rio Tinto finally builds up the scandium market to a kind of a 50 ton per annum tipping point, where it's maxed out what it can extract from its Sorel-Tracy facility, where it recovers the scandium when it upgrades the titanium slag to a rutile equivalent for the pigment market. Somewhere along the way, Rio Tinto is going to be hunting for a primary scalable resource. Ningen itself, at this point, with the mine lease and all that in place, it's probably going to end up becoming almost a pilot plant type of study. And if that all works and they get there somewhere between 35 and 50 tons per annum, having this other nearby deposit all clean and ready to permit with a much bigger operation, that becomes very attractive to any major league player that wants to own the future scandium market. So the stock stirred a bit when it saw that there's finally going to be some news flow that may change the fundamentals, but it's still kind of stuck in a rut below 10 cents because the market sees this as really kind of dead money, waiting for somebody else to build out the scandium market so there is sufficient demand to attract offtake agreements from end users who are finally convinced that, yeah, scandium is going to be part of the future, and here's where it's going to come from. The market is unsure how long this is going to happen. The company, Peter Evanson, talked about perhaps bringing in a partner, and in a prior Kaiser Watch episode, I talked about, well, it wouldn't be good to bring in a partner like Rio Tinto, but what if they bring in a partner of one of these non-aluminum alloy users, such as a Materion or a Bloom Energy, which needs it for another type of application unrelated to aluminum, whose ultimate growth is not like 1,000 tons per year, such as the aluminum alloy sector would ultimately generate. But they would be interested in investing in this, and if they can see that eventually the whole thing will end up being bought and operated by a major mining company whose goal is to make the scandium available for all markets, they would end up making money in that regard. So that's kind of a card we're hoping that they will flip onto the table sometime next year, using Ningen as the basis for turning it into a pilot plant demonstration, while at the same time they beef up Honeybugle and show that there is a substantial, possibly bigger and richer resource nearby that can be, from the start, developed at a much larger scale, and the scandium market reaches that point where the demand for, say, a couple hundred tons of scandium oxide is in place.
MIT published a paper on November 18th, which explains how dendrites grow within a lithium-ion battery. Is this a significant development? I always thought dendrites were something in your brain.
Well, dendrites are these sort of filaments that grow within the lithium-ion battery as a result of the lithium ions traveling from I believe it's the anode to the cathode through the electrolyte. And one reason they use graphite in the anode is that it does not foster this dendrite growth. And this dendrite growth is a problem because the electrolyte at this stage is an organic fluid which is also flammable. And these dendrites, they grow in all sorts of directions, and if they pierce the liners of the electrolyte, they will cause a short circuit, and this is what can turn an electric vehicle into a bomb, because then this will escalate, and you have a major fire on your hand. So for this reason, you cannot use lithium metal in the anode. And all these assumptions that projections that we're hearing about, 10 times current lithium supply needed by 2035, maybe even earlier, that's all premised on the assumption that this problem will never be solved, that there will never be a solid state lithium ion battery. And many groups are working on getting other materials for the anode, such as silicon or a titanium niobium composite. But the best one would ultimately be lithium metal itself. But of course, the lithium metal as anode really promotes these dendrite growths, these little spears, and so it is not being considered as a possibility. But what these MIT scientists did was they did careful studies, and everybody had been thinking that these dendrites grow as a result of some sort of electrochemical degradations of the various materials within the lithium-ion battery. But what they were able to discover, and this was very difficult to do because all of this is invisible, it's inside this material, so it's hard to observe, but they were able to set up a system and establish that the dendrites actually grow in paths of weakness within the material. And they were able to demonstrate that if you could create pressures, that would cause the dendrites to align in a direction parallel to the wrappers rather than diagonal to it, so that they're able to puncture and create the short circuits. Then you would be able to avoid this dendrite growth, and you could potentially use lithium metal as an anode. And so now they're saying this appears to be a mechanical problem of latent weaknesses within the material, which potentially can be resolved by creating a pressure system which aligns the dendrite growth so that it cannot be harmful and create these short circuits. So this is kind of paper was put out there, and now everybody's putting on their thinking caps and thinking, what can we do about it? This is kind of a science observation. MIT has filed for some patents. It hasn't been made clear what the patents cover, but it might have something to do with methods for creating these stresses within the lithium-ion battery packaging to cause this alignment to be in a manner that isn't harmful. But others will be looking at ways of doing this too, trying to come up with ways. So this, it's still going to be a while before they have this sorted out, but it's suddenly shining a light on the nature of the problem, which focuses R&D in a more productive manner in how do we fix this problem of dendrite growth. So I think it's very interesting to see this development. I, of course, am looking at Lithium Mania 2.0 as simply fulfilling the current lithium-ion battery configuration. But should in the next 3 to 6 years they come out with a as a result of this MIT observations, come up with a way of making a lithium-ion battery with lithium metal as the anode instead of graphite. Wow! Then we're going to need an awful lot more lithium than is currently projected, and that would give us Lithium Mania 3.0, just when Lithium Mania 2.0 is starting to sag in sort of 226, 27, when they figured out all the projects that are going to be in the economic study stage and permitting stage and ready to deliver by 2030. Then we could have another wave where they say, oh my gosh, this isn't going to be enough. For now, the assumption is this is never going to become reality, but I think this MIT paper is very interesting, and for those people who are speculating on the whole lithium pegmatite hunt, this is something to keep in the back of the mind as sort of a supercharger that could take Lithium Mania 2.0 to an even bigger level called Lithium Mania 3.0.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. We've been talking with John Kaiser. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.